Yeah. We're back with this paper, let's get it. My confidence up, I'm winning. Money up, that's my mission. I can't wait on spending my money. I'm lyrically focused, I wake up and get it. Pick it up, let's get it. Money up, that's my mission. I can't wait on spending my money. I'm lyrically focused, I wake up and get it. We're back to this paper, let's get it. Money up, that's my mission. I can't wait on spending my money. I'm lyrically focused, I wake up and get it. Pick it up, let's get it. Money up, that's my mission. I can't wait to spend up my money. I'm lyrically focused.
Yo, what's up, guys? Yeah, we're back with another one. Today is the 19th of December 2023, and yeah, this is a video for the higher time frame series, as you saw at the intro and you saw which playlist it's on. So guys, let's get to business. This week, this week I'll be releasing 3 videos. One today, the 19th, one tomorrow on the 20th, and on Friday the 22nd of December, the third one for this week will be released. But the 2 that are coming, the other 2 are for the fair value gap series. But let's get to business, guys. So what do you see here? We see the 6-month chart, and what happened? Nasdaq broke the highest high. We love to see that. We love to see those things happen, and people don't know what to expect anymore. So you see, let me just mark this high. It broke that high. My line is skew. Okay, it's straight now. Whatever, it's fine. You get the point. This is the 6-month what? BC. It's a fair value gap where we buy, so we call it a BC. Why is it a 6-month BC? Go watch the fair value gap series. But in simple explanation, when we go up, when we are painting, we will leave a gap, and that gap we buy from and go up again. That's the simplest way I can explain it. The fair value gap series explains it in full. That was just a quick recap. So on the 6-month chart, what did we do? Boom, we went into this area. Boom, we bought, and we are here, as you can see. Cool, we broke that high. We go to the 3-month chart. Okay, wait, let's start with the 6-month chart. These things I need to put down. So on the 6-month chart, but this is too far. Wait, price here, nah, I don't need to put it down. 3-month chart. When you go to the 3-month chart, we see that, oh, okay, let me label this. After taking high number 1, remember these things are highs here, these highs here. After taking high number 1, we are in a buy model. High number 2, buy model. So we, like, Nasdaq confirmed the buy model here by taking out the highs. So it took out high number 1, high number 2. After taking high number 2, it left this area here as a runaway gap, but used this one over here. It used this area over here for the buys, right? It used this area over here for the buys, and this is a 3-month BC. Okay, before we get far, let me just fix the visibility of this, because I don't want the visibility of this to show in minutes. You see, it can show in days but not minutes. Let's also fix this one. It can show in weeks and days but not hours and minutes. So what Nasdaq did was, okay, after entering this area for buys, it broke high number 1, it broke high number 2, showing you that, okay, we are fetching this high and we are in a market maker buy model. What happened after that? It retested this area over here and used this. Obviously, this is a fair value gap. Let's fix it a bit. Okay, I remove that high. Because the first fair value gap that you're wondering what's that? That's a runaway gap. That will come in like episode 5 of the fair value gap series. That's a runaway gap. We use this, boom. When there are runaway gaps, it indicates that higher prices are coming. That's what I love about runaway gaps. So this candle retested this area, this 3-month candle. It came in to the fair value gap, and boom, we went up even further and took out that Nasdaq highest high from October 2021. Okay, so let's go to the monthly chart. Okay, wait a minute. what do we do? Okay. So I will start marking the consequent encroachments of the wicks to show you the important areas on the chart. Because on the 3 month, they are closer than the 6 month. Because on the 6 month, they down there. Oh my lord. Oh, what did I just do? I removed that by mistake. Sorry guys, let me do this. Where were you? It's fine, let's go back to the 6 month and fix it real quick. Sorry guys for that. Okay, let's go back to the 3 month chart. So with consequent encroachment, so we find the 50% area of this, which is right there. We delete that. We say what? 3 month wick. Three-month wick. CE. These are important areas on the chart, as you'll see that they play such an important role, right, when buying or selling in the silver bullet times. There's an episode of Silver Bullets in the Sombonyo series where I explained what happens. That's where you find your perfect entries, but I'll include everything here because this is higher time frame analysis series. So that's a 3 month wick consequent encroachment, right? After that is a 3 month wick consequent encroachment. We go down to the monthly chart and say, okay, what do we see on the monthly chart? Right. Firstly, on the monthly chart, we see, okay, we bought off this area after breaking the high and we came back into the gap we left, boom, we bought right here. So on the monthly, there's another fair value gap right here, which we just jumped into a bit. Like, we respected it, just jumped into it a bit, used it as buy force. So since we used it as buy force, let me just label it real quick. 1 month, busy. We used it as buy force, right? To come and take out this high here and that high over there. So this high was also taken right here. Right. We love to see things like that happen. So for us to get here, we have to remember that, okay, we retested fair value gaps. And those are the things that pushed us up. Okay. So on the monthly, we will mark consequent encroachments of a few things just to see the important areas that NASDAQ will come back from. Will come back to, I mean. So 50% is around there. Yeah, if I'm not wrong. So we'll say, sorry for that, 1 month wick CE, right? We have a 1 month wick CE right there. Let's just move it there. Yeah. Ish. Yeah, that's more convincing. 1 month wick CE, right? We have those two. So on this side, we're going to use this candle too for consequent encroachment to find the 50% of this candle right here. After finding it, we'll see what the market did on that area. So 50% is there, right? We remove that. And we say what? What is this one? It's also a 1 month wick CE, right? Consequent encroachments, finding the 50% marks of this area. If you look at this, when this month started, December, look at it. It came back into, because it closed above, right? It came back between this, the 1 week consequent encroachment and the 3 month consequent encroachment and used it as a fair value gap. Crazy, right? It used it and sucked everybody in and boom, we are here now. You see? So what happened here is that it took a break. Something was here. You see right here? there was a fair value gap or something for us to bounce up like this. Yes, this can be used as a fair value gap, but there was also something on the lower time frame that pushed it there also. Okay, so we have those. We have that we bounced off what and what and what. So right here, let me not forget this CB, right? There was a monthly CB right here, 1 month CB, right? That we did not really use. Obviously, we're using this order block at first here, right here. That's why we went down, and it gives you the perfect analogy of, okay, we use the order block to go down, but to retest to go to higher prices. So the order block was the reason to get us to get more power, to give us a break. You know, in life, at times, if you are cycling and cycling and cycling, you will take your break to cycle even faster. So that happens. Good. So after that, after using this order block to come back down, we retested into these fair value gaps, boom, and we broke that high. Cool. So I don't see, okay, excuse me. Excuse me. So what's going to happen next? You see here, I'm going to mark the consequent encroachments here, because you will see how important they are just now. So which one is the biggest? This one, right? The one that has a high. The one that was the high. So what do? We arrive, we go boom. After going boom, we remove that. We say it's still the monthly chart, so it's 1 month wick CE. Consequent encroachment is the 50% mark. I repeat, that's enough. We can mark this because you can see how these candles turned right here. Okay, now we go to the daily chart. On the daily chart, let's like zoom out and see. Daily chart confirms that we're in a market maker buy model. I said this a few weeks back, because look, market maker buy model because of what? We set the high, we came lower, we broke the lows, but we reacted off a higher time frame, PD array. Then what? We broke the high, we retested the high, where we retested the area of the high that we broke, boom, we are gone. And remember, a little bit earlier I said, you see this 1 month and 3 month consequent encroachments. Look what is there. A fair value gap. I told you there is something that made us go up. Besides using this as a fair value gap, there is something that made us go up. And if you can look at it, it's what? Simply just this. Let's change the color of this one too and make it purple. This is a 1 day busy. You see right there, that is a busy. And we did what? Boom. This was CPI. I doubted that we were going to use this area. But when I looked back and analyzed my things properly, I saw that, oh, so there were consequent encroachments, like there were weekly consequent encroachments here. And boom, we were here. Oh, wait, I forgot to use the weekly chart. On the weekly chart, it made sense that, no, man, I'm forgetting something. There's a CB right here. This is my favorite because I knew as soon as it played around here, it's going to violate it. Why? Because we should move aggressively away from CBs. So this is a 1 week CB. Busy or CB, we should move aggressively from it if we are respecting it. Like right here, we entered here, moved away from it aggressively, right? Weekly busy. We moved away from it aggressively. as you can see right here. We moved away from it aggressively. So what had happened? Okay, we are in a buy model, you know that. But from today's reference, you probably will be like, okay, so where are we buying from today? Or where are we getting our entries from? Simple as this. So what we do is reference the highs we broke. Okay, I'll put this right here, right? And even change the color for this one and make it blue. Reason is, this one is previous all-time high. Okay, we got that out of the way. That's the previous all-time high. So we labeled, okay, that's the previous all-time high. In this area, we broke which high? That's the July high that we broke here. July 23 high. Okay. Like this, I'm trying to show you why we are confirming that we are in a market maker buy model. We broke the highs already. So in this thing, you're wondering, okay, yes, obviously we will push up, but we must exhaust a bit to get more power. To get more power to go up. So what is this? Okay, let's also mark this high because it's a very important high. This one right here. This was when? December 2021. So December 21 high. We mark that, right? After marking, that's the December 21 high. Look what these two highs create. A fair value gap, right? Since they are creating a fair value gap, we're gonna find our buy entry right here. So, right, let's go down to daily. This is the free things, crazy free things that you'll pay for. Literally, I'm even better than most of your mentors. 90% of them, I'm better than them. Because they don't know what's going on the charts. But anyway, what happened with NASDAQ this year is that it disrespected one thing. It disrespected seasonal tendencies. So it was supposed to range, then shoot up in January. But hey, this December, it's like, let me show you. But remember, next year is election year around the whole world. So that makes sense why we are shooting up and we are going into a new quadrennial cycle. But that's a lot I gotta put in your head because you won't understand a thing. But when we look at it, like, oh, there's a black candle right here. What is that black candle doing in this fair value gap? Remember, a black candle is a what can be used as an order block in this situation. So we're like, oh, okay. The daily chart has so many runaway gaps. It must exhaust at some point. That's what I always remind you and tell you. It must exhaust. So we go to 4 hour. You're going to see all these things are going to move. I'm going to be left with consequent encroachments. Love it. So on the 4 hour chart, we get there. This is probably just for this broker. But okay. We get there. What do we have here on the 4 hour chart? We have a 4 hour OP, order block, that we will buy from. This is a buy area. And the candle will be right here, but the wick will be right. So, oh my God. Okay. So, bodies tell the story, but wicks do what? Wicks do the destruction. Wicks will destroy. Wicks do the killing, but bodies will tell the story. So wicks will kill you, but the bodies will tell the story. Because from the way the body closes, we know where we are going. But the wicks will destroy you, blow your accounts because you are not patient enough. So, first of all, right here, this is a buy area. Right? This is a buy area. Let's go to another one. This is a buy area. right? Then you will ask me, okay, so when these two are buy areas, which one are we gonna use? So let's go down to a lower time frame. So since these two are buy areas, right, we'll look at which one will have more convenience for us. So if you look at this, the all-time high has already been retested and we moved off it. So what do we look at? We look at this area right here. And wow, what do you find? My favorite type of order block on the lower time frame, on the 1 hour chart. So let me remove this real quick. On the 1 hour chart, we have my favorite order block. And what order block is that? The 3 candle order block. You'll know that I love that type of order block. So with the 3 candle order block, we enter off what? The second. We enter off the second body. Like the second candle. The second candle's body, I mean. Right there. So let me change that color to yellow. And right here, we're going to catch a buy. Where do you put the stop loss? Stop loss below the low here. Doubt it's going to even be reached. It's right here. Considerable stop loss. The risk to reward to this is very good. Then we target these highs or whatever you want to target. But you target those highs is much better. We enter off the body of the second candle in the 3 candle order block. Boom, we buy from there. You see the type of entry you can get this week. Those are the type of entries. This is the type of entry I would take. I'm not trading today too. Today's nonsense. Yesterday and today was nonsense. Yesterday I could have released a video, but I was like, no, I would rather release it today. So yeah, you're gonna catch your buy entry from here. The consequent encroachments on the daily, I don't want to use them because it's been ranging right here. There's not been really movement on the daily that allows me to use the consequent encroachments, because actually it's not been ranging, it expanded a lot. So me using that, okay, I love this. So what's happening right here? Here, a sell entry is gonna come out right here. Let's go to the lower time frame. I'll show you real quick. You see here, right here, a sell entry is coming. And when that sell entry comes, why is it coming? Okay, let's make sense of it. So the market expanded, boom. After it expanded, it broke a low. But still, this area here is not violated like as no major low was taken, but this low was taken. So after that, that's a market maker structure shift, right? What do we have here? We have a fair value gap, right? First candle closed within it. Second candle, the wicks killed, but it closed within. What's the time? Okay. So what will happen here is that, okay, in the next 8 seconds, we will see some action. The market is going to do what? The next candle will open, boom, wick up, then go lower. Let's look at it. Wow. This is a power of 3 type of move. This is a sell area to where our entry. Market maker structure shift. So let's say you were taking an entry from right here. Where would you put your stop loss? You put your stop loss right above this. And your take profit will be right up there. That's your entry for the day. And boom. But this buy one is the one we're more focused on. So yeah, guys, I gave you a little bit to think about, a little bit to see, and say, okay, this is how I'm thinking for this week. Yeah. More to come in the Fair Value Gap series. This higher time frame series gets 1 video per week. So yeah, we'll be back with another one next week. So next week, Monday, is Christmas, so obviously we won't get a video on the 25th because I'll be with family. But probably on the 26th, if I'm back home, you'll get a video. So it's been a great video, guys. Don't forget to like, share, and subscribe. It's the Sombonyo way, the making money way, profits always way. And yeah, guys, thank you. I'll make sure that I give you more and more crazy content. You know the vibes, guys.
Like this, I'm going big. She gave me a kiss. Mwah. That nigga sick. I'm going big. I am a king. Yeah, nigga, I'm in. They couldn't close all the gates cause I fit. Kicking your shins. I got no time for no quit. G63 in the mill. Now that's the deal. I'm getting bigger and bigger. I mean, little by little, I'm making a scene.